Hello folks, I'm L.A. Little with TA Today, Technical Analysis Today. We've been in business for a long time. What I do is I read the markets. I read them for years, oh my gosh, 30 years now. And if you like what you see, and if you want to help me, not only help you, but help others, which is what the point of all this is, if you could hit the subscribe button, I'd really appreciate it. If you like what you see, hit the like button. And now for that, I'm recording this on the 9th, June 9th. And, you know, the last time I looked at gold was on May 3rd. And let's go through what we have here. So on May 3rd, we were right here. We were on this bar. And so we'd had a big spike up, this bar up here, big wide price break, big high volume. It was a negative bar in the sense that the sellers took control of the bar, but it still left volume at the top. When you leave volume at the top, typically you're going to come back and try to test it at some point. Market is all about test. And so if you understand that and you understand how to read the test, then that will help you out greatly. And so that's what, that's what the Neoclassical method is. It's all about testing. And what we do is we figure out what the swing points are, which is these H's and L's that you see, and we use those to tell us what trend is. And in this case, trend has been up, and that's what the arrows are that you see. Like here's a breakout over some prior swing point high that was over here, and that gets us the trend that escalates higher. Eventually you get another high, you get another one here, you get a low finally there. And once you break this one, you change trend or you reaffirm it, which is what we did. Now, this was the critical break. Okay, why was that critical? Well, because that was that high. The high was here. Now, back on May 3rd, I had said, we had lower volume on this, right? Close with a little pickaxe. More than likely, this thing was going to try and push up. How much? I didn't know. But I thought it would try to push up. Could it get back up to here? Sure. I mean, that's possible. This had been a long bullish trend. Usually your first bounce is going to be the best one. And so you get the nice big bounce. You go up, you break it. When you break it, that says the retest regen is now in effect. In other words, within 1 to 2 bars, most likely, you're going to see this thing retest and attempt to regenerate in that test zone. So you take the high and the low, that's your zone, and then what you're doing is you're looking at how it comes back. Now the back of the envelope case is that usually when you come back, you're gonna trade back about 2/3 of the way, so like about to right there. You're probably not going to trade all the way back to the bottom, which is here. Well, what did this one do? Well, it almost got to the bottom. That's a negative also. So you get this big spike down, and then eventually you get a little spike up to try to go up, and then what happens? The bottom falls out on Friday. This confirms what we thought all along, which is that more than likely some sort of a range was going to try and set up. And that was what we talked about back in that May 3rd video. So even though it took a month, markets take a long time. It's hard to keep track of all this stuff for a month, but that's what we thought would eventually happen. We get a consolidation phase, and this would trade to the sideways. Now, one of the reasons we thought that was that back at the time, we thought that we were going to get a reset because this, back at the time, was extended, just as it's extended now in the sideways trend. And the extension, this is mean time to failure. This number you see down here. That mean time to failure, when it gets around 70–80% cumulative mean time to failure of the trend, it's probably going to reset. And the only way it can reset is to break a swing point low. So in the current state, if we move this out of the way, where's the swing point low that it needs to break to reset this trend? Well, it's either here or it's going to be a high. Well, the high right now is way up here. That's not going to happen. It could go long enough across here to where this sets up as a swing point high and it can break it and turn bullish again. That's also possible. Those are the kinds of things you're going to be looking for. More than likely, though, when you break a retest regen, you're going to break the swing point low. And so the odds are is that this swing point low is going to get broken. Knowing that, that gives you some measure of how much more pain there is. That's 1764. It's sitting at 1780. You're not talking about much, right? Another percent. That's the scenario when you're looking at the daily. Now, I want you to also notice one more thing while we're sitting here. This is at 65. 65 says, you still can go higher, but you're getting to the point where that will have to reset as well. And so that's something to keep in mind. So in other words, we could see a much longer consolidation here as a result of that being what it is. And that wouldn't be abnormal, because if you take these lows and the highs, you made a tremendous run, folks. And so a consolidation that lasts for months is not going to be abnormal. As a matter of fact, I think it's going to be the case when we look at gold, when I look at the monthly with you here in a second. So going to the weekly, shifting over to it, retest regen, where could it go to? Well, the charts are telling you this is the most likely area that buyers will show up. This is the most likely area that the sellers will show up. And if it gets past that, up here. And so when you look at something like this, this gives you an idea of what's my risk, right? So let's say I'm long here. What's my risk? Well, I can only, the risk side is way down here. What's my reward? Well, I can only get to there. Potentially, I could get back to the top. So this looks a lot worse, right? It doesn't look great from a risk-reward perspective, just purely looking at R&R. Now, you can argue other things like, what's the probability of certain things happening given the patterns that we see, but those have turned somewhat negative also, suggesting that this is going to be a range at best. Now, where's that range going to be? I would suggest that it's probably going to be to there, or potentially all the way back down to here where we're showing support. And so that's a big range. Where's price now? Well, it's basically just about in the middle. And so from a weekly's perspective, I don't see a lot of good reason to be trying to, eat into a position here. Great, this is not the place I'd be trying to buy. I'd be trying to buy back here. And so if you're looking at these things just, from a purely chart view, using the neoclassical method, you're going to see these things up here. And so as personally, I took some of this off back here, and I took some more when it broke or was breaking. Actually, I didn't get it up here, I sold it down here. And so that's my personal situation. Why did I sell? Well, because I have a lot of it, or at least I had a lot of it. And the probability that we could get down to here has increased quite a bit. This is where I want to buy it. And so what I want to do is take those sells that I did and put them back on at a lower price. What if I'm wrong? Well, that's the price you pay if you're wrong. If you are, more than likely, you're going to get another chance to get in. It's, I didn't get the best exits, so my average is like here. So it's 17.15 or something. So, or excuse me, what is that? 17. This is 18. I got it crossed over. I can't quite see it. 18. So 18.15. So that means that even if I'm wrong, if it gets back above this resistance, I can buy back in. And so that's the idea of the trading around some sort of core position. You hold some position that you're comfortable with. You sell out somewhere when you know that the trend has changed on you, and you try to buy it back in if your long-term trend is still in place, which it is. Finally, let's turn to that monthly. And here's the monthly. This also is one of the reasons I believe that you shouldn't be holding everything here. You got long tails. Long tails tell you that the buyers don't have control of the bars. In other words, they drive it up and it's driven right back down by the end of the close, in this case, the end of the month. Well, if you're gonna see the sellers taking control, you don't want to be sitting there forever. And so that's another reason. Where could it come on this bar, at least on this chart? Well, you could get as low as the 1650 area. So when you look at all those things as a whole, you know, the risk rewards, the probabilities that are associated with this particular index at this particular time, this asset class, well, it doesn't make a lot of sense to be buying here. It probably makes some sense to be selling some if you got too much. And you want to try and buy it on the dip. And so the dip, the 17 is in this area here. The 1650, if we're looking at the weekly, the 1650 is going to be just below this, right? Just like in that area, which, you know, whether they can get there or not, I don't know that it will. More than likely, you're going to get support here. You'll get bounces out of that. Eventually, you can drive down to here probably, but that's a long way out. You can figure that out later. Right now, the market's not telling you enough if that's really going to happen. Okay, that's the setup. You know, range bound, ranges, again, to reiterate, probably there or here. You're halfway down. Doesn't make a lot of sense to be buying here. You want to be selling, you know, if you got too much and you get a nice bounce, you want to be selling probably into the bounce. If you get the chance, you want to be buying near what probably are going to be the lows. That's it for this one. Have a great one. Stay safe. I'll see you next time. Take care.